of the ARPA funds as revenue replacement. You don't have to run any calculations or provide it to them. You can take that standard allowance and then use the funds for government services. And that's been pretty broadly defined. There are a few things that they've specifically said you cannot use it for. You cannot put it into a pension fund. You cannot use it to pay debt. And you cannot use it to replace any revenues that have occurred because you changed your tax rates and therefore your revenue is not there. Those they have explicitly excluded. But other than that, as long as it's for the benefit of your public, it is pretty much a general government service and qualifies based on the purpose that they've used. So, for example, if you take that option, it doesn't give you any more funding. So if you get $5 million worth of ARPA funds, you can't claim any more than $5 million. But that standard allowance allows you to take whatever you've received up to $10 million and recognize that as a standard loss. So you can take that and use that for general government purposes, such as personnel costs, such as law enforcement, such as the term they use in the documentation is pay-go building infrastructure, which in effect is cash-funded infrastructure projects, where you don't go out and bond, you're using the cash that you have to fund that project. And so it's pretty broad. Now, even if you make that allowance, take that standard allowance, you don't have to use all of the ARPA funding for revenue loss recovery. You can still use portions of it for the other categories if you want and if it makes sense. But given the scope of that standard allowance, we thought it was pretty important to let you know, and we think you should consider using that option because it allows you to cover your general government services, those costs, which then frees up other non-federal money to be able to be used in ways to either fund other projects, help people that are impacted by the pandemic. You could still use your own funding for that, but the compliance requirements may not be quite as high for that type of funding. And so that's what I came to tell you about, was the standard allowance option that came out with the final rule. Is there anything else that you'd like to go over?
No, I just wanted to be able to ask you questions.
Are there any questions?
When would we have to let them know by?
The reporting deadline is April 30th. So you have to, if you're going to take a revenue loss recovery option with specific funding, you have to choose between either the previous calculation method or the standard allowance when you make your report. And that report is due April 30th. Now, the whole time frame for ARPA is that you have to have the costs, you have to have it earmarked, so to speak, designated for use by the end of 2024. You have to have the funds spent by the end of 2026. So you may not have to actually make that lost revenue recovery selection this time around. If you haven't incurred any costs, you don't want to use it for that, you may not have to claim it this time around. If you don't claim the other method, you can still claim the lost revenue recovery next year when you do the report and apply the expenses there.
So this is an annual option that we have to do with the report every year?
The reporting is required every year by April 30th of each year. How you are using the funds, you don't have to use them all this year. And so if you don't use the funds, you don't report on them this year to their use. And so then if you use them next year, you would report on it next year. So if you're not using the lost revenue recovery option this year because you haven't used the funds, then next year you can make that selection and use the funds at that point. That is an option.
If nothing else, these discussions remind me why I never became an accountant. Could you talk a little bit about the required audit that we've been discussing? If we go one route versus the other, we're still going to have to do an audit.
Regardless of what way we go.
What are they auditing one way versus the other?
When you expend the federal funds, if you expend over $750,000 in a year, then you have to have a single audit. as part of the financial audit. When that happens, they come in and they take the compliance requirements that the federal government has stipulated for the program, and then they have to go through and make sure that each one of those compliance requirements is met. For example, for offsetting economic distress with these funds, if that's what you choose to spend it on, and that's the option you select, one of the requirements is that you have to go through and assess what the financial impact has been to that person or that organization. And then you have to have that documented, and you can only recompense up to the impact of that loss. So in the single audit, they would come in, they'd say, okay, that's what you're doing, show us the documentation where you've got that calculated, how you determined it, and that then would meet the requirement. If you don't have that documentation, if you didn't go through those steps, then likely there's going to be a finding where they say you didn't do everything you were supposed to. And then that flows through as a finding to the single audit. Let's say that you want to use some of the city funds to address financial impact. If you take a revenue loss option, then the requirement is that you have to use the funding for general government expenses. So you can show, look, we've got this much in law enforcement, we've got this much in employment costs, we've got, and so we've used it. That then frees up cash that you can use as a city, not federal funding, but your city funding, to be able to help address economic impact. And at that point, you don't have to go through and do the same federal government compliance requirements with that funding, because it's your funding, not the federal government's funding. Does that address your question?
It does, thank you.
Okay. I know I can get long-winded, but if you have any other questions.
Are there any other questions from the council on this process where we have McKay here?
And you're always welcome to, I'm always happy to give any answers. If there are questions that come up later, I know sometimes I wake up in the middle of the night thinking, oh, that was a question I should have asked. You're always welcome to reach out. I'm happy to answer any questions if there are some.
While you're standing there and the treasurer's next to you, for your, what's your consideration, Jeanette? Or input?
My input is that I think we should take the revenue loss, because I would personally, when the audit is coming through, I think we have enough expenses that we can put towards the revenue loss. And then that frees up our money to go towards a lot of projects that have been brought up recently. And it just makes, I will say it will make it easier for us to get through the audit and stay in compliance.
What makes it confusing is the terminology, 10 million.
But it's only up,
Up to what we
to
get,
what we
we're gonna get
receive,
5.7, that's what we're talking about.
yes. We won't get any
Yeah.
more than what we're receiving. It's just, which for us, I think is a good thing, because I don't think we could, our expenses are only so much. We're a small group, but I think over the 2 year, well, it's actually more than 2 years, it would more than make up for it.
I don't think there'd be a problem expending the money. There's a
No,
lot of
I
need in
just
this
want to be
community.
able to do it within the compliance of what the federal government wants.
And given that time frame and the methodology, is your recommendation then that we just take and put that entire ARPA amount under the standard revenue loss deduction?
Well, we
Or were
can
you
look
gonna
at it
defer
this
it?
year, like you said, we can just take a portion of what we've received. If we want to take it this year under the revenue loss, push the rest to go with the next go around and look at them. And that to me gives us time to possibly figure out how we would like to do the next go around. But
Would our filing this April cover everything we've already spent?
well, how would you recommend that we do the full amount that we received already? Because I know that we've got some projects coming up.
I think the only question then would be, if I'm not mistaken, is do we have enough expenditures in government services to cover that entire ARPA amount? so that we're not locked down on the other side and the reporting is just easier?
My crystal ball is broken, but I think it's safe to say that between now and the end of 2020,